Right now is a crucial moment for the S&P 500. This next candle could push past this resistance line that we have respected for the entirety of 2022. If this breaks out to the upside, this could see Bitcoin hit $25,000 and Ethereum finally reach back up to $2,000. How's it going, everyone? My name is Jake with Trade Confident, and yes, I know this sounds too good to be true. The markets have been absolutely insane over the last couple of weeks. It feels like there hasn't been much rhyme or reason to really any of the crypto market, but today I'm going to show you why, if the whales decide to, we could see a massive spike in price across the crypto market, but especially for Bitcoin and Ethereum. First up, again, I really want you guys to pay attention to this resistance structure. At the very top, at the start, it was January 4th of 2022, and as of right now, it is January 23rd of 2023. This candle today ended with the absolute top of the candle touching and falling from this structure resistance that I just talked to you about. Now, before I go any further, I want to talk to you about what is called puts and calls. Now, these are options trading terms. Essentially, what this means is if you put in a put, it means you are betting that the price is going to fall. And calls are betting on the price rising. If at the end of the allotted time, your bet was correct, you are then rewarded what you are entitled to by the options contract. With that being said, there are a ton of puts in this area. A lot of people are very likely betting for the price to go down. And in the normal spot market, people are likely taking short trades. Again, this is just another way to bet the price going down. With that, because there is such strong resistance here, a lot of people are likely putting their stop losses for their short trades at this 400 line. If whales so choose, as they have done multiple times with Bitcoin over the past couple of weeks here, we could see a short squeeze. Essentially, what this means is whales are intentionally forcing losses against puts and short traders. Once those puts lose, once those short traders are liquidated, there is very little standing in the way for long trades to come in. As this buying pressure mounts and this selling pressure just diminishes, absolutely dissolves, there's very little in the way of pushing a candle up like crazy. If this happens, very likely anything over about 405 on the S&P 500 would result in this gigantic move up. If it does, the first structure resistance we need to be looking at is about 410. And from there, and this is completely likely, the next place would be 430 to meet the next highest peak on this channel pattern. And I know this seems like a pretty big jump for the stock market, but it really isn't if you take into account what we've seen in previous weeks. Now, I want you to pay attention to this date. You can see it at the bottom of the screen here. It is Tuesday, August 16th, 2022. If we move over to Bitcoin, you'll notice the very day before, August 15th, was when we peaked on Bitcoin at $25,000. On Ethereum, August 16th is just 2 days later after the peak, after Ethereum hit as high as $2,030. As has been proven time and time again, where the stock market goes, Bitcoin goes too, and where Bitcoin goes, the rest of the crypto market goes with it. So I have to say, these are just estimates. If we do reach $430, it is not guaranteed that Bitcoin would reach $25,000 or that Ethereum would reach $2,000. Of course, it is, again, all speculation, but it's very important speculation nonetheless. Another thing to pay attention to here is a massive inverse head and shoulders pattern here. Now, admittedly, this is a bit rough, but it does qualify with the support structures being almost exactly the same for the shoulders, with the head pushing past that. Head and shoulders patterns are typically trend reversal patterns, which means it's very possible at this point that this entire downtrend could be reversing with just this head and shoulders pattern alone. If it does, again, this would be a huge indicator of a possible breakout, and that breakout could push us as far as that 430 or even higher, depending on when the start of the bull market actually hits. To further back this up, on the S&P 500, the price versus whale money flow is actively sitting at about 58. Routinely in the past, we've seen the price versus whale money flow actually peak around values of 70, which means we still have plenty of room for the price versus whale money flow to move up. At the same time, we are also seeing the price versus well money flow rising sharply as this candle has closed. This tells me that whales are actively putting money back into the market, and of course, this will push the price up. Same goes for the trend exhaustion. We still have a little bit of room to move up before we are in the top areas on its chart, which is traditionally where we are seeing those big moves down. With all that said, this is entirely speculation. It is equally likely, equally possible here that we could get completely rejected at this structure resistance for a move back down. If it does reject and the price does fall, we need to first look at structure support right about here at 387. And if it falls past that, the next one we need to look at is about 375. Now, the low for Bitcoin would be about 21,468 for the first low. And if we reach $374 right here on the S&P 500, this happened on December 22nd. This would very unfortunately, let's find December 22nd right here, put us back to pre-pump levels. Now, this would be really unfortunate and nothing is guaranteed, but as I told you, where the stock market goes, Bitcoin follows, and where Bitcoin goes, the rest of the crypto market goes too. So that is why this is extremely important to pay attention to. This next candle could be the deciding factor between a major pump and an absolutely devastating crash. If this rejection happens, we will be looking for a possible entry into Bitcoin. And what that would look like at this point is a buy signal along with price versus well money flow low and trend exhaustion low. And if we get all three of these signals, that is most often where we're seeing gigantic runs up in the market. Now, as you are looking to enter trades, I want you to be using proper risk management because this is the only way you're really going to sustain making money in the market. Like, yeah, sure, jackpot moves are going to happen. You're going to make money. But really the name of the game has become not losing money. So if you're a trader that wants to bet on a short squeeze, if you think that the move up is going to happen, we're going to profit like crazy, and you decide to enter a Bitcoin long trade, what I highly recommend doing is using the TC top and bottom finder and the entries that it uses. If you want to try this method, and this is not financial advice, this is just a strategy that has worked for us, always do your own research. And I'm going to preface all of this by saying that if you want to try this strategy, what you're going to want to do is split your initial investment into 3 equal parts. The first part, you're just going to mark it in at whatever the current price is at that moment. With the next part, you're going to set a buy limit at the price indicated here. In this case, it's $17,677. And with the last part, you're going to set another one down here. This way, if we do get rejected at this structure resistance, it's all good. Let me show you why. What'll happen is the price will drop, and as it drops, it'll be picked up by this buy limit. Now, instead of having your break even at this $22,900 mark, your break even will actually be a lot lower, somewhere around this area. This means rather than the price needing to shoot all the way back up, the price only actually needs to move up to this point, your new break even, in order to actually make a profit. If something catastrophic happens and the price drops even farther, all this means is you're going to get into profit even sooner. This is the strategy that net us 126 wins in the bull market. And at this point, it's honestly looking like the bull market could be coming. So we may be switching over to this strategy soon. Now, again, this is not financial advice. I just really wanted to educate you guys on what good risk management really looks like. And with that, if you want to be able to catch any possible pumps or crashes in the market across the S&P 500 or the rest of crypto, be sure to grab the indicators at the links in the description. Once you click the link, it'll bring you to our indicators page. And the best possible deal is the Pro Trader Bundle Pack right here. This gives you all 11 of Trade Confident's amazing indicators. And I have to let you know, purchasing all of these individually one by one would cost over $2,000, but the Pro Trader Bundle Pack gets you 70% off. It is our best possible deal and includes the TC top and bottom finder, trend exhaustion, and price versus well money flow indicators you just saw me use. You get lifetime access for a one-time payment, and you certainly will not be alone with over 3,900 sales. With that, thanks so much for watching. Trade safe, trade confident, and I'll see you in the next video.